Hey everyone, welcome to the Your Money Your Life podcast, episode 268 of the pod. Do me a favor, wherever you're listening, make sure you like, subscribe, 5-star rate, and review this podcast. Also on YouTube, do the same thing, hit the notification bell, like, comment so you know when we're going live. Let's get into it. There's a lot to discuss today. There's a whole range of things that we need to touch on. First and foremost, I want to jump into the market as we always do and talk a little bit more about what's going on. And we talked about volatility re-entering the market, and that's proven to be true. So let's see why. Let's see what's going on as we open up our segment. So first and foremost, we're going to look at our chart, our weekly chart, and kind of dissect what's been happening. If we look past 5 days, we've actually been up in the past 5 days, 1.5% on the S&P 500, primarily driven by a lot of movement yesterday. And we'll dive right into why that is. But if you look at it, yesterday was a powerful move. We saw the Fed speak on its outlook on the economy and on its outlook on interest rate cuts in 2025. And they said they're going to probably do two more interest rate cuts in 2025. And futures before and when this came out was futures were strong and the market rallied yesterday because of that news. Inflation is actually being tamer, and they still stuck to the fact that they're going to do two interest rate cuts in 2025, which is a widely anticipated move. The central bank also raised its inflation outlook though and lowered its economic growth outlook. So they raised their inflation outlook, the Fed did, and they lowered their economic outlook. They lowered the GDP production. I think it was like from 2.1 to 1.7% on the GDP side. And so they're saying transitory is back. This is what a commenter is saying. At least that's what the insinuation was. The market reaction said that investors are willing to believe that tariffs and other policies won't create a lasting inflationary pressures and the Fed can stay in control. So this commentator is saying the market believes the Fed can stay in control of what's going on and rein in inflation while keeping pace on economic growth, and so investors are betting on that. That's why the market rallied yesterday. And I think that's fairly, true if you look at what happened on the move yesterday. That's what investors are betting. And again, I told you that there'll be volatility in this market. And the main thing is we're going to see that for a few more weeks at least, right? Until we get into April, mid to late April. And another thing about that is we're actually looking for the Fed and quantitative tightening and easing what they're going to be doing when they're tightening, when they're sucking money and supply out of the market by buying, that's slowing down the economic growth. When they start easing and selling into the market, into banks, that's going to spur economic growth and increase money supply. And that's where you'll see the biggest change that I'm looking for is when that happens, how the market reacts. I think the market reacts really, really positively to that. If you look at historical performance, when that happens, the market actually reacts really, really positively. So that's one thing to look at. But quantitative tightening is essentially over. We're getting to the point where tariffs are going to cause some inflation, but quantitative tightening is starting to slow down, and so that's one thing that you'll see, and that will spur the market. Again, we said never give into this whole fake theory of like the market's going to zero. The fear when a correction happens, which is healthy, there will be volatility. That's what the market brings and presents. Aggressiveness, risk creates reward, right? The person that starts a company takes on incredible risk and may be bumpy, but they have larger reward. And that's just like how things go. So you want to keep your eyes on that market wise. And again, we'll look at the chart. Past month, again, it's been a lower month and 6 month. Year to date, also lower. We'll see if that is positive by year end. I think it could be. I think it certainly could be. And again, we're still up on a 1 year time frame, on a 5 year time frame. People need to just sit tight in it, potentially be buying at opportunities that present itself, to be honest. Let's jump into current events this morning and this week. We talked about rates. The Federal Reserve, they left interest rates unchanged as expected. So that means they didn't do anything in this meeting. They didn't change interest rates. They didn't lower. They didn't increase. They kept it unchanged. They reaffirmed their forecasts as we talked about. And they said they're going to still cut at least 2 to 3 times. And they did say that looming tariffs could reignite inflation potentially. But they did. The thing we talked about was they cut gross domestic product growth to 1.7 from a December projection of 2.1. So that's important news. They're seeing a slowdown in the economy, and that's an important news to understand as well as what's going on with inflation, right? Those two linchpins really carrying what's going on in the markets. Top skills in the US are on the rise. So literacy tops. Artificial intelligence literacy tops LinkedIn's inaugural list of skills on the rise. A data banked ranking of the 15 skills that professionals are prioritizing and that companies are hiring for right now. With 70% of the skills used in most jobs expected to change by 2030, the list identifies the emerging areas professionals should invest in to get ahead. Let's see this. Okay, so this is the skills that people need to have. Um, let's look at this. It's a LinkedIn list of the skills that are on the rise for jobs that will be on the rise. The number one, AI literacy, of course, that makes sense. AI is rapidly changing what's going on. That makes sense. Conflict mitigation. Okay, I like that. That's nice. Okay, so someone that can mediate conflict in the workplace. That's good. Adaptability. Okay, these are just skills. Okay, adaptability. I think we should all have that. Process optimization. I like that. Making things more efficient, streamless. That's going to especially be important as headcount gets smaller. Headcount's going to get smaller because there's going to be less headcount needed to do certain jobs, and someone that can streamline and use tools, AI, a tech stack to make jobs simple, going to be heavily needed. Innovative thinking. That's always been around. That's a skill that everyone needs. Public speaking, huge. We all need to learn to public speak better and with more fervency, fire, articulation. That's a good one. Let's read one more. Solution-based selling. Yes, sales. Sales isn't the one thing that's never going to go away. With AI, with all these different things, the sales is not going to go away. There's people that are going to have to sell these tools all the time. There's people that are making a lot of money selling these tools at large companies, at small companies for themselves. That is a skill that is needed all the time and is something that you should always hone and learn, even as a professional within a job. You sell yourself to the next professional, you sell yourself to your boss. That is so true. Let's look at another story. I just found it interesting because I've ridden the Amtrak for short trips every once in a while, of course. And so Amtrak CEO is stepping down. And CEO Stephen Gardner announced his resignation on Wednesday after 4 years at the helm of the U.S. passenger railroad company. He said he enjoyed the full faith and confidence of the administration amid broader White House scrutiny of transportation agencies and threats of funding cuts. Amtrak enjoys its busiest year ever in 2024 with ridership up 15%. So he just isn't sure that the company continues to. Oh, he says he isn't sure that the company continues to enjoy the full faith and confidence of the Trump administration. And so he's stepping down. He said, I don't want to get into a battle. I'm stepping away. I'm stepping down from this. That's pretty big news. I mean, it's a large company. They did 2.2, they're 2.42 billion in fiscal year 25 funding they secured. So $1 billion company that the CEO is stepping down and is walking away. Speaking of the administration and X, Twitter gets a 1 billion infusion. So Elon Musk has gotten a funding boost. X, Twitter, whichever you call it, his social media platform raised new equity to the tune of roughly 1 billion. And the fusion ups its valuation to about 32 billion. So he bought this company for 44 billion in the private markets, took it private, excuse me, in the public markets, took it private. Company was down bad for a while. It still is down bad. Advertisers left. They had to move to subscription model. They had to move to different things. Advertisers left. And now he's saying that's cut a lot of headcount. And now he raised new equity and they valued it at 32 billion. Some say it was closer to 40 billion. Some insiders say, right? They're saying that he got the valuation back up to 44. Elon Musk participated in the round himself. He also reportedly bought 150 million in X shares last year at nearly the price he paid in 2022. So he bought more shares last year at the price he paid in 2022. So he really cares about X. He's on all the time. He's putting his own capital behind it and others of his friends. They did a new round. They raised, 1 billion. So again, it's interesting to note. It's stuff to know about and keep an eye on what's happening in both the public and private markets. We talked about NVIDIA a lot. The Magnificent Seven, that's the tech shares. Again, people will say that the world is over. It's not. It's not. You have to understand investing. Let's look if there's anything more special. Dating apps are all in on AI, whether users want it or not. So data. Yeah. So AI might have more riz than you do. Match Group is using AI to help users brainstorm something more interesting to say for first message than hey. Okay. A common sentiment among dating app users is that you don't want to put in effort for a witty or creative first message, but they would like to receive one. In other words, we want to be recognized as okay. So I guess guys are getting help to open up the lines of communication in dating apps from algorithms, artificial intelligence. Interesting. I think yeah, it makes it more profitable. It does help people, but it has to be super organic. What if someone knows it's fake? What if someone knows it's AI and it's not you? What if the way you meet is because you're using AI's thoughts and not your own? Is that okay? Is that acceptable for people out there? Who knows? That's something I want to watch. I'm actually curious on Match Group stock, how it's been doing. So let's take a look, YouTubers. Past, it's not been doing well. 5 years, it's kind of taken a dip. It lost its 2021 hype and it's never recovered. People back outside. Like what? This is surprising to me. I think that people still primarily meet people online. And so to see the stock never really recover, I would love to look into the operations because it seems like a layup that people are meeting primarily online. Even if people are back outside and it's no longer mania of 2021, the stock never recovering is quite interesting to me. In contrast, let's look at a company like, another Magnificent Seven and see if that's recovered. Much, much better chart here on a 5 year, even 1 year basis, 5 year basis of a company that is good. See, that's what people don't understand. Markets understand differences in good companies and bad. Here's the stock of Google, height of 2021. It's well past that. Match Group, you saw down here. Google, you see up here because there's differences in the way companies operate, the cash flow, the valuation, investor sentiment, future growth that people don't realize when they're just throwing money at certain stocks and not really understanding what they do, what they are, if it's a good company. That's the difference in professional management and not, right? And understanding what's going on in the future just because someone told you a tip, they don't know what they're talking about 99% of the time. So that's a good lesson, folks. Let's dive into the question of the week because I thought we haven't done that for a couple weeks. So I really want to dive into it this week. Let's do it. Question of the week. Find my chart here. The first one is how much does a speeding ticket increase the annual cost of insurance? I feel like we've done this one before, but let's do it again. I think it was a few $100, maybe 500, 400. I don't know. The answer is 480 to 648, depending on how fast over the speed limit. Interesting. So, how much does a speeding ticket increase the annual cost of car insurance? Is that real? So, you're going to pay annually 480 to $648 more just because of getting the speeding ticket? What if you get multiple? I used to, didn't everyone get like multiple at some time point? All right. All right. Interesting. I will be driving again, so that's good to know. That's good to know. Question League, what is the estimated amount of money lost in worker productivity due to March Madness? So March Madness is happening right now, I guess. I haven't even turned into a game. I should. I didn't even make a bracket this year. Um, can anyone tell me what's going on in college basketball? I don't know one thing. We've been too busy running New Street, multiple New Street subsidiaries, companies to watch it this year, but I will probably watch the championship game, whoever's in it. I should like. I wonder if I could still make a bracket. I'll try to make a bracket. But the loss of productivity of people watching these games and not working, totally understandable. I'm with you there. Is $9.6 billion. That's a lot of productivity lost for some college basketball. Is it exciting? I try to watch it. I'm not as excited. I watch NBA playoffs somewhat, but college basketball I just cannot get into anymore. Folks, I am traveling. Got some business to attend to the next couple of days. Lots of exciting stuff happening with New Street Advice Group, New Street Sports. As always, stay tapped into us and share with family and friends. We will talk to you next week.